We are back for another exciting week in the markets. We got earnings, we got GDP data, we got inflation data, we got a jobs report. We'll be discussing that and a lot more today on Money Never Sleeps.
I don't know why that sounded so good today.
Thanks for joining us today, everybody. As we get going, do us a favor, hit that like button, subscribe to the channel. Remember, nothing Kevin or I say is financial advice, so please do your own research for making any buys or sells. Kev, the market seems very uncertain at the moment. We don't really know what direction it wants to head in. It started the day up. It went back down. We saw some stuff about, India potentially invading Pakistan. I think that gave the market a little bit of jitters. So a lot of, I think, posturing and just feeling things out. And then when you add to it all of the economic data we have this week, which I'm still not sure how much that really means when we still have the tariffs looming. Trump could say or do anything at a given moment and the markets react. So it's a really weird time out here. Like, I feel like not a lot of people have a really strong take on things, which provides an opportunity if you do. So how are you doing today, buddy? And what is your take on the state of the markets?
I'm doing great, man. I'm glad to be back and talk some of the markets with you. Chris and everyone else who's watching, thank you guys for being here. It's always glad to have an audience. With the markets, it's so funny. And again, it's like we're waiting for something to happen, right? We talked about this, I think, on Friday, and it just seems like, okay, this is kind of strange. Maybe we're waiting on the data, but the market volume has been pretty shitty, in my opinion. You're not seeing too much fluctuation beyond, like 100-point range for the past few days. Obviously, you've been pushing up, but the volume has been dropping each day. And there's other things in the market that are telling me, not so fast. We might have one more drop in this market before we could see some upside. And I honestly expect us to have some upside at some point. I would hate for it to be that, this is like the slow trickle to the upside and we just are, carrying on into the summer. And it's like, well, we've kind of just missed the rally. It's been the slowest rally that we've possibly seen, right? Because everything's been super violent these past few years. It's either, sharp V-shaped recoveries when the market's down. That was under Joe Biden. And under Trump, when the market does come crashing down, absolutely insane, right? It just doesn't want to stop. So looking at the market, seeing everything right now, I'm only focusing on things that are, obviously the memes are important, but I'm looking at things such as like Bitcoin. We have some news on Bitcoin. We'll talk about that in a little bit and when that could be a problem. And, we're just waiting for something to happen. I'm waiting for Trump to open his mouth and say the wrong thing for the markets and everything to go to shit. And then we get our little recovery after. Maybe Powell speaks. It's just we got some time in between anything happening, and we're just kind of in the dark right now.
Yeah, I've seen people on Twitter talking about, and posting their charts of the weekly on Bitcoin and how we've entered a new bullish pattern is formed and all of this stuff. And I wonder how much of that can really be applied when in previous cycles, when they saw this, there was far less chaos in what is going on right now. And so we had, years ago when this was going on, like Michael Saylor didn't have this giant position in Bitcoin that could become problematic. We didn't have the tariffs going on. So I don't know if I can totally I would love to get behind a Bitcoin rally in a bull market, but I don't know if I can just based if they're only going on technical analysis structures from previous cycles when we had much more stability as far as the state of the market goes.
Yeah, absolutely. And I think the huge thing, and this is kind of why this year I feel like I've been a lot more successful in my trades, is that we're looking at debt. We're looking at when that comes due, and we have to understand that crypto, when we talk about Bitcoin and Ethereum even though Ethereum is like
Dead.
a pimple on a rhino's ass at this point. It's unimportant. What we're looking at with Bitcoin is that it is TradFi now, right? There's big money, TradFi money that's in it. So you're talking about BlackRock, you're talking about Vanguard, we're talking about Michael Saylor. There's a lot of these companies that are invested in this, right? Even GameStop's talking about investing in Bitcoin. I don't know if they did or not. Maybe that's good, maybe that's bad. Who knows? But with Michael Saylor, we just jump into Michael Saylor right now because I think that's probably the biggest thing, that he acquired more Bitcoin today. These convertible bonds that he keeps putting out, which is similar to what GameStop recently did, he's done it all the way up from probably the 60Ks, maybe even before then, where he's using MicroStrategy. He's issuing those convertible bonds. He's taking that money, he's throwing it into Bitcoin, and he just keeps building and building and building and building. That's kind of a Ponzi. I'm not saying it is 100%, but it's kind of like when it rhymes like one. And at some point, if your liquidity runs out, you know what's going to happen. And we know that liquidity ran out pretty well in March and April, where I don't think we're quite done yet. I think we need to still get that one push to the upside. Yes, Chris, rhino pimples equals not great.
Well, and real quick, you mentioned liquidity, and I want to backtrack like 30 seconds. You also mentioned a lot of the institutions buying Bitcoin. When they need liquidity, Bitcoin is the first thing off of their balance sheet. They are not holding that over bonds, over cash. Like, they will absolutely, if they need liquidity, they will sell Bitcoin in the blink of an eye. So, like, if you like the big companies and the financial institutions buying Bitcoin because it's pumping your bags, just be aware that it can crater your bags just as quickly.
I mean, crypto is a casino. It really is. You and I talk about Fartcoin being like the state of the future, right? We're talking about things that any sensible person is not going to throw into a pension fund. Like, I don't think they're going to put Fartcoin into, the New York State teachers pension fund at any point. Maybe they do when they realize that Michael Saylor isn't buying Fartcoin. But the point is that, like you said, they're going to offload this stuff if it gets volatile. And it kind of is a casino where they're making money easily, right? When it's going up, everyone's making money. But when times sell, you start seeing those flash crashes that we used to have all the time in crypto and in Bitcoin. I think about April of 2021 into May of 2021, 2022. Like, we used to get those really bad 50% drawdowns out of nowhere. You're not getting them right now. But what happens when there is no liquidity? We didn't have much in May and April. Crypto kind of stayed afloat. Michael Saylor was obviously doing these convertible bonds. Problem is, what happens when the greater global economy starts to come to a halt? No one's issuing any new debt. A lot of debt's coming due September, October, plus, say, MicroStrategy is dropping in value, and say a lot of people, like you said, are selling Bitcoin. That is the perfect storm for absolute chaos in this crypto market. So even though we're not seeing anything but positive movement to the upside and bullish talk for Bitcoin, there is definitely some big questions we need to have going into the end of the summer about how they're allocating this into their portfolios, because I think that there's going to be a drastic shift at some point. I just don't think it's today.
All right, let's look at this week, because we do have, last week was pretty light, but there's a lot that is going to be coming out that's going to paint a much clearer, I'm not going to say much clearer, I shouldn't say much clearer, a less hazy picture of what is going on in the U.S. economy. So we get job openings report tomorrow. Expectation is 7.5 million. Wednesday, we get private sector employment. We got GDP. We got consumer spending. We have personal income. We have the PCE data. We got core PCE data. So, I mean, Wednesday morning is going to be a lot. And then it's actually interesting because they pushed, normally the PCE data comes out at 8:30 a.m. East Coast, but for that day, they pushed it at like an hour and a half. So that day is going to be coming out while the markets are open. So that's going to be interesting. Then on Thursday, some more jobs data, not as much. Friday, we get the unemployment report. So another big one there. So a lot to look at this week, and the markets are going to react accordingly. We saw some more info about, India and the U.S. could be reaching a trade deal fairly soon, which would be a positive thing. Still, Trump is saying, and the Trump administration is saying that they've had conversations with China. China is saying they have not had any conversations. I don't know. Like, who am I going to believe? The guy that lies all the time, or the country that lies all the time? Like I can't really make heads or tails of that. So I'm just kind of sitting here waiting for more clarity on that one.
Let's talk about that then. That's
Yeah,
the
go ahead.
crazy. Like, and again, maybe we just talk about big picture things today. Looking at the tariffs and everything like that, at some point, this is going to hit the shelves of the U.S. consumer, right? Where we're just going to have a huge supply shock. And it's very possible that we just also have too much supply that they can't offload, and that's going to be hurting, the stores. It's going to be hurting consumers if they can't afford certain things. These tariffs, for the time being, we have not seen the true effects of them, right? We just haven't. It's probably going to be another few months, probably 2-3 months before it's like, oh, that's the shock. That's what the tariffs actually do to the U.S. consumer. It's not impacting anywhere else in the world. They're just raising the prices coming to the U.S. People in Vietnam are still buying Vietnamese goods. They're not worried about buying anything that the U.S. is exporting. It's primarily the U.S. importing so much that at some point this trade war is just a trade. This is essentially a war against the U.S. consumer. Waged by our own country. It's just kind of insane. And I think there's an argument to be made too that, again, at some point maybe the tariffs become the main narrative and the economy is failing so bad that some of these institutions start selling a little bit earlier, trying to pay off some of that debt, right? This is just potentially one possible outcome. So when we get all this talk and everything like that, sure, the deals might be fine, but the longer they have, we're seeing the prolonged effects of it. Like, we're not having any of these deals go through. We're not taking any tariffs off the table. The greater chances that when we do get hit with these and we see the full extent of them, it's going to be absolutely catastrophic for the U.S. economy. Jamie Dimon came out today and said that the best case scenario for the U.S. economy right now is a recession. 60 CEOs from companies are putting out that 60% of jobs are in jeopardy moving forward if the tariffs begin to slow down the U.S. economy. So we're in a place where anything could potentially happen. We just haven't seen the first effects. Right now, we're just kind of like in this Goldilocks period where it's like a lot of talk. People start losing their jobs. Things start being really expensive. Stagflation kind of hits. You're in a terrible position for this U.S. economy. So I wouldn't be surprised if some of these institutions are just like preparing right now, like even with earnings. Like, I can't imagine this week. There's a couple of them I'm looking forward to where they're just like, guys, just so you know, it might not look good in a few months, right? Unless they want to sell from a little bit higher and they juice the markets.
All right. So we kind of talked about bigger picture stuff on the week. Do you have any charts that you think are worth looking at right now?
Yeah, we could take a look at a few of them.
Okay.
Let's take a look at the S&P real quick, just because we'll see where the broader market is. Yeah, this really good recovery, right? I thought this was a 5-way move down in this last C wave. It might have completed and I might have missed it, and we started pushing up. But obviously what I'm looking at here is possibly just the ABC moving right over here. Now that would mean that something over here is wrong. This might be a little bit more impulsive. It might have been a 5-way move, and just on the smaller time frames you can see it. But this is a pretty good ABC corrective pattern. You see wave 1, wave 2, wave 3. Tells me that we probably got 5 waves down to the downside. So that's why I brought up that big picture idea, because even though I don't like it, I like the idea of us moving up in the summer and then getting the big crash when all the debt comes due, say September, October. What I'm seeing here is this could be topping out at some point, and if it does and something bad does happen, say the tariffs slow down the economy to the point where everything is just, going up in flames, then you're probably got 5 waves down, and it's going to be pretty nasty. So we're just kind of going to keep monitoring this. And the thing is, too, look at the volumes dropping like crazy as the price is going up. Stochastic RSI is at 197.85. You are so close. We are so close to something just breaking, and it might be the best thing possible for this market if they want to prolong it. Take this opportunity. I'm not saying you, but I'm saying market makers and people who obviously have a lot more stock than any of us watching, who take this opportunity to sell from higher. I wouldn't be surprised if we see some of that in the coming weeks, that are like, oh, Jamie Dimon sold another 32 million, or Mark Zuckerberg offloaded, 5% of his company or something like that. It wouldn't surprise me if we saw that, and then they see it again later in September, October. But I bring this up because I want to look at the VIX too. The VIX is under 30, but you are kind of in this weird spot where it could pop off again. You have a gap down here at 20, what is that? It's 23.52. So maybe you get one more bullish green day, drops this a little bit lower. And then once that gap is filled, you have the chance of pushing up again. I don't think it's going to go as high as where we were on April 7th when we hit 60, but it is possible that we put in, obviously a higher high than where we are. There's a gap right here that could be filled at 36.64. And it doesn't have to be a massive drop. It doesn't have to be like one day, but we can get like 3 or 4 days in a row where it's just down 100 points each day. And that could be the point where we start to see the launch pad for some either stealth QE or potentially a rate cut, right? Maybe that's May, maybe that's more likely it's June at this point, since nothing is necessarily broken. But again, we continue to watch that. But this is something I don't like, because every time we are putting in these triangles, it does break out to the upside, right? Broke out here, broke out here, broke out obviously in this big one from August of 2024 yen carry trade to potentially another yen carry trade. We'll see if that comes to fruition, but these things always break out, and it's pretty easy to chart the volatility. Just waiting to see if anything happens now. We're in this window where something bad could happen, and I'm just open to that possibility, especially with looking at the stochastic RSIs. NASDAQ overbought, same ABC pattern kind of. This is wrong. Get rid of that. And the Dow, you're at that key level of resistance. Something probably is going to happen. I just don't know when. So I think this is one last trap, and then that might be the best case scenario for things to be prolonged just a little bit longer. We'll look at Japan in a second, but outside of that, in the U.S. for the broader markets, the dollar is still fairly weak. Isn't a good thing for either the Swiss franc or the yen. If we look at the yen right now, it's had a really bad day, right? We can see that it's coming back down. We had this little faux rally. Now we're going to see what happens in Japan tonight or in the next few days. Policies changes can easily happen. We know that the BOJ said that they were willing to stabilize markets last night. That's not a good sign. That just shows that they're going to print into infinity. And at the same time, for the time being right now, we're looking at the Nikkei as well, pushing close to 36. But that doesn't look very sustainable. It really doesn't. At some point, this is going to come collapsing down, and I wouldn't be surprised if it's in like 1 or 2 candles back to this 31, this yen carry trade from August 2024 level. Maybe it pushes up a little higher to fill this gap at 36.743. Would also be finding resistance at this blue line, but after that, it's potentially gap reckoning over the next, I don't know, at least a year or so. So we'll keep an eye on that. That could be the thing that absolutely gets us to a place of QE. But across the board, looking at other things, the yields are down. So that means
people are buying up. Yeah, people are buying bonds like crazy today.
Yeah, I see how it's going under. It's under 420 for the 10-year, 470. Like, people are, see, that's why it's kind of dangerous, right? You see something like this and you're thinking, like, why is everybody hedging? Why is everyone buying some of these things now while they're valuable? There's a good chance that these continue to rip higher. We see the 10-year at 5.5, 6%. If we get to a point where the U.S. gets some QE, and the yield curve might just go absolutely parabolic. But from that across the board, I'm just looking at other things too. I haven't taken a look at some of this other stuff. Oil too, it's another one. It's very tricky here. It's overbought. It looks like it just wants to put in another leg down. So it seems like there's a lot of hedging out there. Even one that I should talk about because they're going to be reporting earnings at some point this week. I forget. Let's see if I can pull them up. UBS is in their own market. I forget whatever the Swiss market is called. They're eating shit, right? The price is down by like 24 or something like that. But you're seeing this in the US. It's overextended. The volume's coming down significantly. We know that they're holding a bag of toxic debt from GameStop. And we're also seeing this today, which is absolutely insane. We talk about this stock all the time. FFAI. Past few days, it's been, relatively really low. It hit as low as 83 cents. But on Thursday, it shot up 27%. Friday, a little bit of a pullback. Today, it shot up, and hit 138 after opening up at, 114. So you're seeing some volatility here, and we thought that this way it might have been one of the stocks they've been using to hedge against GameStop's price going up. And, GameStop today, relatively within this range once again. So I think that if we do see something with the yen, there's a good chance that what we're seeing here in FFAI is more hedging. And I think that's what a lot of people are doing. That's why you see the bond yields going down. You might be seeing some people doing some sales up here. Even though the market's flat, it might just be distribution. And you're seeing the currencies really out of whack. I don't know. I smell something bad coming down the pipe. What it is, I don't know. Honestly, could be anything at this point. So we'll keep an eye on, obviously these stocks, these are hedges against something bad happening. At least our theory is it's not guaranteed that GameStop's going to save us from a recession. Fartcoin or the company that doesn't make electric vehicles is going to save us from, 300% tariffs coming or World War III. This is just knowing where people are vulnerable and not exploiting it, but taking advantage of the fact that, hey, they need this to go up, so I want it to go up. So that's kind of that situation there. But we are seeing a lot of that hedging across the board. And I don't know, just kind of concerning. A lot of people on the timeline seem fairly bullish and optimistic that a trade deal is coming. Who knows?
I mean, people inside the Trump administration know, and you can bet your ass they're going to insider trade it. So
yeah,
if you're able to find and watch those accounts, then you'll probably get a little bit of a heads up there. But do you want to take a look at Bitcoin before we wrap it up? Anything else in crypto?
Yeah, we think
interesting.
Yeah, we'll look at Bitcoin and we'll look at your Fartcoin one more time because, again, maybe that is what saves us from all this bullshit. Now
like Bitcoin's starting to bounce back up a little bit today. It was in the 95s when I woke up this morning, and then it took a turn down when the markets opened, and now it's on its way back to 95. So I don't even know what to think.
Yeah, and the fact that you broke out above this, and let me pull up the EMAs again, right? Look at that, 50 and the 200. Now the 50 is moving up, 200 is following a little bit after. You're going to get that close to the death cross. I'm open to the fact that this pushes a little bit higher. I think it's possible that we go back to 100K. Even if we do get a bit of a squeeze where everyone's like, oh, I got a short, it's at 100K again. Maybe it goes to 110, 108, 109, somewhere around there, right? It's very possible. How many convertible notes does Michael Saylor, issue at, say, 105? Dude, once the prices start going down, this guy DCA like a fucking idiot. I'm sorry. You don't do it this way, bro. You do it when there's dips, and he's buying on the way up. Yeah, a lot of people remember, well, I guess not anyone that watched their show, but at one point back in 2000, Michael Saylor lost $6.1 billion worth of MicroStrategy, like in one March morning. It just went straight down. It was like down 50 something percent. I wouldn't be surprised if he fumbles this back.
Don't do it again.
You got the guy who's capable of doing it. And again, I sat and watched him on a beach talking about Bitcoin, and I was like, this dude's chewing his face too much. There's something up here. Yeah, but I think that there's an argument to be made that Bitcoin could squeeze a little bit higher. I also expect a pullback, but at this point, with how much there is behind Bitcoin, let me pull this up on not GameStop. Fuck, man, I gotta get my head out of my ass. Bitcoin on Coinbase, GameStop. The volumes are fairly okay. I wonder what CoinGlass is doing for their liquidations and their funding rates. I'm just gonna pull it up real quick. Yeah, I don't want that. It's giving me funding rate. Yeah, see, that's a problem. I'm going to share my screen right now. There we are. Negative. Everyone keeps shorting Bitcoin. That's a problem. You're going to keep seeing it get squeezed up. It's too easy for them not to take advantage of the liquidity. And is it real liquidity? Who knows? But everything's kind of up. Once you start seeing some of this flip red, I wouldn't be surprised if it's one flash crash straight down. And again, I think that's probably going to be off of some news event, but Bitcoin has not came down even throughout all of the March, April shit that happened with tariffs. Liberation Day held up pretty strong. So give me the squeeze, please. I honestly see it going a little bit higher. Annoying, but
I was looking to get this. I was looking to get the old squeezer there. All right. Anything else? Let's look at Fartcoin real quick, because it's just we have to. It's too funny not to. I mean, listen, Fartcoin, it got as high as 125 in the wee hours of the morning. It's come back down a little bit, still holding up very well. We saw a dip over the weekend. It went under $1 for a little bit. it showed a lot of strength bouncing back. We'll see. Like my conviction in Farcoin is as high as ever. So, I put it out on Twitter. If it goes to $25, I'm gonna get Hot Air Rises tattooed on my ass. So I'm really, really hoping that I have to go make that tattoo appointment.
Yeah, I mean, you got to show it. You should we should do a live stream.
While I'm in the tattoo chair, that'd be amazing.
Yeah. Hopefully, we're all extremely wealthy at that point, and we're just like, you know what? Let's take the day off. Let's watch Jweb get a fucking ass tattoo. I will not be subjecting myself to any ink or needles, but I will be a huge fan of Farcoin if it does come back. If it does bounce off maybe the 50 or this trend line here, because I honestly believe that there is going to be such a stupid pump of everything at some point this summer where this thing's probably going to go to all-time highs. Again, don't quote me on that, not financial advice, but I look at something like this, low market cap. I'm investing in shit that's low market cap right now. I expect there to be pumps. I expect there to be big pumps and more of the dumps coming out of the things that are extremely liquid. NVIDIA, right? Stuff like that, where there's tons of money pulled into it. Just start pulling that out, start throwing it into things, just little bets here and there. Farcoin's probably going to be one of them. I'm bullish on the fact that we had a cup and handle. I just want to see a back test. This is perfect 5 waves up. I expect 3 waves down, or WXY or WXYZ, and then maybe continuation from there. The height was at 272. I'd like to see that. I'd like to buy some and then see it break. But for anyone who is holding, obviously, I don't know. There's something about Farcoin. The chart is looking better than other things to me. Obviously, I expect a pullback, but I think that this is stupid enough. This is stupid enough that we just might live. We might survive this recession off of Farcoin.
It still hasn't gotten listed on Coinbase. It's still not on Binance. I do think that there is going to be moves up when that happens. I've seen some of the other, maybe it never goes to $25. That's fine. I don't whatever. But, I've seen the things that have gone to 5, 10, 20 billion market cap. And Farcoin is just as good, if not better, because it's just funny because it's fucking Farcoin. So that there's, don't overthink this one. Farts are funny.
There was one stock that shot up today, and there was something that, oh no, it was Farcoin. Fuck. Farcoin was has a larger market cap than I don't know,
70% of the companies out there.
How do you not believe in this?
Believe in farts. That's all I have to say. All right, that's how we're going to wrap it up for today. Appreciate those of you who joined us. Chris, Mr. House, I know there are a few others of you out there who haven't commented. That's totally cool. We really appreciate you guys watching. Yeah, it is. I'm sorry, but Shiba's whatever. Okay, we'll be back on Wednesday to cover a shit ton of data that's going to come out the next 2 days. So be here for that one. We appreciate all of you. Hit that like button if you haven't yet. Subscribe to the channel. Drop a comment. Have a great week. Stay safe in the markets, and we will see you on Wednesday.
Take care, everyone.